Hi, Warriors. So the lead of today is the Dixie is poised for one more thrust to the upside. Could be a terminal thrust up towards 108, 109. Start off with the daily Dixie. You could tell where this was the employment report the CPI last week. And all we've done since then is consolidate, retrace a little bit. Looks like we're on the verge of a breakout. That should take us to new highs, and perhaps we'll get a nice divergence on the daily. We have a little bit of a divergence, but if you've been following my work, it's not ideal when it's over 70 for top picking on 3 drives and divergences. Same way, it's not ideal for longs under 30. So there's a possibility we blow off, 170 points or pips from here, and we diverge on the daily. So that should take Euro close to the target I've been talking about for a long time, the 102-ish area, cable, 118 area. I'm going to be very interested in where the Aussie is when the Euro hits that target. We're diverging. It could be what Ellioticians call an ending diagonal, keyword ending, meaning that the trend is ending and to be alert for reversals. Still looks like we should get another push up in the yen. The yen is held up okay with, it's not setting the world on fire, but, it's still moving with the yields. And yields have, I believe, let's take a look. We almost got there. So we're up at, this prior double top was 488, and we've gotten to 87. What's interesting about this is, just like the dollar, we'll have some divergence at new highs and yields. And in fact, with the 10-year making new highs, the TLT did not quite do it. I am looking for a new low in TLT, and some divergences are going to develop. And I'm thinking that if we get the big swoosh or some type of capitulation move, S&Ps take out the 4,200 level, that people are going to buy bonds. So the S&Ps was talking about 4,400 being important. Resistance up to 4.5 is where I was going to throw in my towel as a bear. Still hasn't gotten up there. I'm not sure if it will get up there, but still looking for some type of washout under the 4,200 level. I think that should that happen, maybe we get 29 VIX. This move, we're stalling at 21, and it's a big area, and just a measured move from 12.5, 8.5 over 21 gives you 29.30. And that would be around where it was in March when the S&Ps were 3,800. S&P target for me, if they fail, is this weekly moving average down here. Where is it? Here you go. About 39.5. So if things break down, we do get this breakdown, which I still think can happen, that would be where I'd be covering. One of the reasons why the market's in trouble, and I pointed this out to everyone last week, and that's Nvidia, which is the poster child for AI, which is the stock that lit up the parabolic advance in July, where everyone, all they had to say is they have AI, and the market would come in and buy with both hands. I talked about the potential of a right shoulder developing here. The news yesterday about export restrictions of chips to China, especially the kind that Nvidia makes, took us down. We left a gap. The neckline comes in at 411. So just a measured move. If we get a breakdown under 411, call it 410, call this 500. That's $90. It's going to take you to 320. And that would be where the gap would be filled back here. When we started gapping up, it was actually in June when it started really accelerating. So that's also, I want to cover one more thing, because I know everyone's getting real bulled up in the metals, but just be careful with the silver here. If you're leveraged, I'd be taking some off the table. You know, we're starting to get some nice divergences on some shorter term time frames. Here's a 30-minute. Okay, see how we're starting to diverge, and then here's the 2-hour. Still diverging, a little bit over 70. Gold acting better than silver. So it's my contention to be very careful in silver. At the minimum, you know, my bottom call at 2040, we didn't get quite there. We got to 2060. But even in a bull market, as this is, and I really don't expect it to get going until the dollar tops. The gold could have a bull market with a strong dollar. Silver definitely needs a bear market in the dollar. Therefore, if I'm thinking the dollar has one more push up towards that 108 level or so, I'll be interested in seeing where silver is. My best guess is you'll have at least some type of 50% retrace, maybe back down to 230, 240, and then we start getting through there. This kind of haunts me for getting overly committed in the silver market. Is this would be the exception for the market to put in a major bottom with the RSI momentum confirming the move. So tomorrow I'm going to have Michael Cow with us at Urban Cowboy. Michael is renowned for his geopolitical work and how he ties it into the markets. So he's been here once before. Looking forward to catching up with Michael, especially with what's happening in the world today, that we have wars in 2 theaters at this time. So wait for your levels and reduce leverage, and don't just count your pips, count your blessings. I'll see you in the room. Adios.